If you're thinking about investing in gold and silver because the economy feels shaky, despite what mainstream media says, this video is for you. Today, I'm breaking down simple, beginner-friendly tips to help you get started with precious metals the right way, without hype, fear, or confusion. First, let's talk about why people buy gold and silver in the first place. These metals aren't meant to make you rich overnight. They're hedges. They protect your wealth during inflation, economic uncertainty, and market downturns. Think of them as long-term insurance, not get-rich-quick investments. So, you're ready to make your first purchase, but what should you actually buy? If you're a beginner, the most straightforward and secure place to start is with physical bullion. We're talking about real, tangible gold and silver coins or bars that you can hold in your hand. This isn't a stock certificate or a digital entry in an account. It's a physical asset that you own directly, free from counterparty risk. This direct ownership is the core appeal for many who are seeking a reliable store of value outside the traditional financial system. For gold, it's best to stick with the most recognized and trusted 1-ounce coins in the world. These are often called sovereign coins because they're minted and guaranteed by a national government. Your top choices are American Gold Eagles, Canadian Gold Maple Leafs, and South African Krugerrands. Their weight and purity are globally recognized, which makes them incredibly liquid, meaning they are easy to buy and sell anywhere in the world with very competitive pricing. For silver, the same logic applies. American Silver Eagles and Canadian Silver Maple Leafs are excellent, highly trusted sovereign coins. You can also consider simple, generic silver rounds and bars from reputable private mints. These generics often carry a lower premium. That's the cost above the metal's market price, making them a very cost-effective way to accumulate more ounces of silver for your dollar. What you must avoid, especially as a beginner, are so-called collectible or numismatic coins, colorized coins, or anything pushed with flashy marketing and a limited edition story. These items are sold with extremely high premiums, sometimes double the actual metal value. That premium is pure profit for the seller and almost never translates to a higher resale value for you. Stick to bullion. You're investing in the metal, not the story. Now, let's talk about premiums, because overlooking them is one of the biggest and most common mistakes a beginner can make. You might see the daily spot price of gold or silver and think that's what you'll pay, but it's not the whole story. The premium is the additional amount you pay, over and above the metal's spot price. Think of it as the cost of doing business. This fee covers everything from the fabrication and minting of the coin or bar to the dealer's operational costs, insurance, and their profit margin. For gold, premiums are typically in the range of 3 to 8%. So, if the spot price for an ounce of gold is $2,000, a 5% premium means you'll pay an extra $100. The specific premium can vary based on the product's popularity, its form, whether it's a coin or a bar, and the quantity you're purchasing. With silver, you'll notice that premiums can be much higher, often falling between 10 and 25%, and sometimes even more. This is largely because the fixed costs of production and distribution represent a much larger percentage of silver's lower overall price compared to gold. Your goal as an investor is to minimize the premium you pay, because the lower the premium, the better the long-term value for you. And here's a pro tip that can save you a significant amount of money. Always compare prices. While online retailers are convenient, local coin shops often have lower overhead and can offer better prices, especially if you build a relationship with them. Another important rule: don't buy on emotion. Fear sells. Whether it's mainstream news or alternative media, someone is always predicting doom. Instead of panic buying, consider using dollar-cost averaging. That means buying a small amount at regular intervals so you avoid buying at the peak. As far as how much gold and silver to own, most financial educators recommend anywhere from 5 to 20% of your portfolio. It depends on your risk tolerance. Remember, metals protect wealth, but they don't generate income, so don't overload on them. Once you've made your purchase, the next critical decision is storage. This step is far more important than most beginners realize, as how you secure your assets is just as vital as acquiring them. The most direct method is home storage. This means investing in a high-quality, fireproof safe. look for one with a strong burglary rating. To truly secure it, the safe must be professionally bolted to the floor or a structural part of your home. An unbolted safe can simply be carried away. Discretion is also key. The fewer people who know about your holdings, the better. A bank safe deposit box is another common option. It offers the benefit of off-site security, protecting your metals from a disaster at your home. However, this convenience comes with a significant trade-off: limited access. You are entirely dependent on bank hours and holidays. In a major crisis, access could be restricted or denied altogether, which defeats a primary purpose of owning physical assets for many investors. Finally, there are professional third-party vaulted storage services, often called private depositories. These facilities offer the highest level of security, often in strategic, non-bank locations. Your holdings are typically insured, audited, and segregated from other assets. This peace of mind comes with annual storage fees, which are usually calculated as a small percentage of your total holdings value. Now, let's talk about avoiding scams. Stay away from high-pressure sales reps pushing numismatic collectibles, overpriced gold IRAs with hidden fees, or online deals that seem too good to be true. Stick to reputable dealers and always research who you're buying from. Later on, if you want to get more advanced, you can look at paper metals like ETFs, such as GLD and SLV, or mining stocks. But for beginners, physical metals are the safest starting point. Whatever you buy, keep clear records: when you bought it, what you paid, and where it's stored. This makes taxes and resale much easier. And finally, have an exit strategy. Are you buying metals for long-term protection, for emergencies, for retirement? Knowing your plan ahead of time helps you avoid emotional decisions, especially in volatile times.